Hey, welcome back to another episode of the Ranch Your Way Show. I am Lacy. If you don't already know, I'm solo today. Winnie is out taking care of some other business. So you get me today. And I want to talk about something that's been on my mind. It's a book that's been on my shelf that I stare at every single day, and I started reading it recently. Building Your Warehouse of Wealth by R. Nelson Nash. And if you've read Becoming Your Own Banker, you know that Nelson was a thinker. And when you read his books, in my opinion, I wouldn't say they're an easy read. They're deep. And so it really got me thinking, and I thought, you know what, this deserves a podcast episode, because he really asked a question of, and I have some notes that I'm referencing that I sat here making when I was reading this book. And I also am going to read some of the highlights that I made as I was reading. You know, it just comes down to a simple question of, where do you store your wealth? And have you even ever thought about where you store it? Not where you invest it, and not where you spend it, or not where you hope it grows someday, but where do you warehouse the value of your life's work? So let that sink in. If you're a farmer and rancher, where do you store the value in the work that you're doing currently, or the work that you have done for years and years to build that ranch? Maybe you're on a 100-year-old operation. What are you doing to store the value that has been created in the past 100 years? And I think that as farmers and ranchers, we understand warehouse more than maybe other industries, because if we're cutting hay, we don't leave it laying in the field. If we're harvesting grain, we have to store it somewhere. We're not just going to throw it in the ditch and leave it there. We don't leave the hay in the fields to rot. And so this really got me thinking about how there are hay sheds or barns or grain bins that we build to store our grain or our hay, and that is storing our wealth. So why don't we think about our money in the same way is really the question today, because we should be. Income flows in, but wealth is what remains after you've earned that income. We go to work, we get paid in whatever that might be, even if you're not in the agriculture industry. But we don't always need to just thinking about, how can I make more money? It's like, where am I storing my wealth that I've created so that it impacts me for years to come and impacts the next generations even? What are we doing with it? Because every single dollar that we earn lives somewhere. Where does it live? Do you put it in a mayonnaise jar out back? Do you put it in your mattress? Is it in a bank account, a TFSA, RSP? Is it in the stock market? Is it land? Is it equipment, grain inventory, cattle in the field? Or do you just have cash savings that are sitting idle? Almost every ag client that we meet with does have some form of cash that is sitting idle. So every single one of those places that I've listed is a warehouse. And the question isn't whether you have a warehouse, it's like, which warehouse is the right one for you? And so which one is the right one and what makes it a good one is another point to consider. If we're storing our grain, do we store it in a bin that has a hole in it where it's going to get wet? Are we going to let our hay get wet so that it's moldy? I mean, the answers to those are obvious. No, we want a grain bin that is sealed and it's solid and it's going to keep our grain in the highest quality that it can. We're going to feed our hay that is dry and not moldy, because we want the best for our animals. If our animals are in the best condition that they can be in, then our profits are higher. So you're a smart cookie, you know that already. Is our wealth liquid? If it's not liquid, what problem does that pose whenever you need to access it? Can you access your money when opportunity comes? That's a big question. And I heard years ago, long time ago on Mary Jo's podcast, and I think I've referenced this before, where she talks about, you don't hesitate to put your money in your 401k. So she's in the States, so that's why she's referencing a 401k. So why are you hesitant to put it into a policy when you have access to it within 10 days? This is what Mary Jo says. But your 401k, when you put money in there, you can't access it until you're, 59 and a half, something like that? Can you access your money when opportunity comes? Not after you have to sell your investments, not after you wait for approvals, but when you need it. Can you access it? Can your wealth continue growing while it's stored? That's a big one. Control. Who decides when you can use your money? Let's go back to the 401k conversation. If they're telling you you can't access it until a certain age, are you really in control with someone else? So if you can't access the funds in your RSP until a certain age, who's in control? Predictability. Can you count on that warehouse and having your money regardless of what's happening in the markets? That one's huge. If I get Nelson's book here, he talks about how when it became normal for gold and silver to be stored at a bank, they decided, we could create receipts, loan the value of these precious metals out to customers, get paid interest, and we don't have to create more gold because we still have it here, but we're going to charge them interest to use it. And so that is what the banking system is all about, is creating money out of thin air. And if you've read anything of Nelson, he talks about that in his books. But he talks about the receipts that were loaned out against the precious metals. The receipts could just as well be used in trade and commerce, hence avoiding the necessity of a trip to the warehouse to get the precious metals and complete business transactions. So they just started creating receipts. This became common practice, but it also left the door wide open to one of mankind's basic problems: the propensity to steal. Face up to it, that was the first labor-saving device: theft. Don't produce anything yourself, just steal what others produce. And there are all kinds of sophisticated ways to steal. And then there's a couple of quotes here that I liked. Jim Trotter says, "Give a man a gun and he can rob a bank. Give a man a bank and he can rob the world." Thomas Jefferson says, "Banking establishments are more dangerous than standing armies." Nelson goes on talking about the precious metal warehouse owners and how they noticed that the stuff that belonged to others was just sitting there and earning nothing. And that's when they decided, why don't we just print up these receipts? So the customers will never notice the difference. And so the world got introduced into the fractional reserve lending system. This led to the use of paper money throughout the world. And he goes on to say, so banks lend money that doesn't exist. That is fraud. If any other business did that, they would be thrown under the jail. But this has gone on so long that the practice has become normal. And that's where you've heard us talk about, we have become so conditioned to what we've been taught about money and the management of money, the movement of money in our lives, that we just accept it. And he says that people accept it and think nothing of it. They let bankers do their thinking for them. And then Henry Ford says, "It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." That is powerful. This brings us to our problem today. Where are you going to warehouse your wealth? Banks make money by lending money that doesn't exist. And so that was my first points that I underlined in that book. It's powerful. We have been conditioned to think this way, and now we think nothing of how we treat our money, how the banking system works, the flow of money. We think nothing of it. We work, we earn an income, we deposit it to the bank, we pay our bills, we do whatever it needs to be done with it to live, to survive, to thrive, whatever it is, and we think nothing of it. But if we stop and think about how we can interrupt the flow of money, the conditioned flow of money, we can create something that is so powerful, guys. When we start talking about how can this be powerful in my farm or in my ranch, guys, we already understand warehousing. Every farm has it, and I talked about it before. We have grain bins, we have machinery sheds, we have fuel tanks, we have hay sheds. If you calve in a barn, you have that. None of those buildings create wealth. What do they do, though? If you really stop and think about it, they preserve wealth. Because if you don't protect what you've produced, eventually you could lose it. And money Our money, the money in our lives, deserves the same intentional care. You owe yourself that moment of stopping and thinking about, what is the flow of money? How does my money flow? When I work and I earn an income, how is my money flowing? And could it flow better? Could I interrupt that cycle that I am so used to and make it work better? No warehouse is free. Every warehouse has a cost. So equipment depreciates, real estate requires taxes and maintenance, the markets fluctuate, bank accounts have fees, cash loses purchasing power. So you hear Nelson talk about the lost opportunity cost on cash. So a lot of our farmers and ranchers are operating on cash. And the first question I say to them is, do you remember what we talked about, the lost opportunity on cash? Because we need to ask ourselves also, which cost are we willing to accept? Every warehouse has a cost. Which one are we willing to accept? Which one aligns best with us? Nelson always talks about, and we talk about in Farming Without the Bank, every dollar stored in one place cannot be simultaneously stored somewhere else. So when opportunity comes, are we buying land? Are we expanding the herd? Are we helping our kids? Or are we surviving drought? You've heard one of our recent episodes with a client of ours talks about surviving the drought. Are we starting a business with the dollars that we have stored in our warehouse? And can our warehouse respond to that? Or is your wealth tied up in RSPs or the markets or whatever it might be? Ask yourself this. What if your warehouse could do more? What if your grain bin could produce more wealth for you? Most places simply store money. What if your warehouse could do something more? What if, while protecting your wealth, it also created additional wealth for your family? So when we start talking about generational wealth and passing on the farm or the operation sustainably, taking care of the generation that is phasing out of the business, this is where a properly structured participating whole life policy comes in. And it's a very unique policy, guys. It's the vehicle that we use to do all of these things that I've been talking about here. While you're storing your wealth inside of the policy, there's something else happening. And if you're new here, maybe you've never heard about it. What is that policy doing? One, it's creating a death benefit. So when you pass away, here in Canada, death benefits are paid out tax-free. That death benefit, that's going to create opportunity for the next generation. That's how we're going to reset how we've done things financially. Instead of going to the bank for the financing of the next generation, we're going to use a death benefit. It's capital that didn't exist before because your funds are growing. And it's capital that arrives exactly when your family needs it. Guys, that's powerful. Farmers and ranchers, we often think in generations. We think like, okay, well, who's coming back? Who's not coming back? Now there's grandkids. What are we going to do? Do the grandkids want to come back? How are we going to make this sustainable so that we can continue with the operation that has been built for the past however many years? We're planting trees that we're probably never going to sit under. Like the trees in my yard, I'm like, when those cottonwoods have reached their lifespan, it'll be my kids' problem, not mine, because I'll probably be gone by then. We're caring for the land that one day we hope our grandkids care for, and so on and so on. The important question here becomes, where are you storing wealth today that will help your grandchildren own the farm or the ranch tomorrow? Let that sink in. And then if I go back and I start reviewing where the important parts that I wanted, because I encourage you to get this book, head over to our website or reach out to us, wecare@rancherway.com, email us, and we can help you get a copy of this. So one thing that I started is, fortunately, there's a place where wealth can be accumulated and stored that does not engage in lending money that does not exist. It has been around for over 200 years and is widely accepted. There are millions of people who participate in the practice. It is dividend-paying whole life insurance with a mutual company, one that is owned by its policyholders. Life insurance policy owners pay premiums to the life insurance company. This forms a large pool of money because there are lots of people participating in the idea. The pool of money is now the property of the life insurance company. It is not the property of the policy owners. So we need to go back and read some, and you'll see this. So he goes on to say, look at the financial statement of any substantial mutual life insurance company, and you'll see that the most of the investments are very conservative things, like bonds, things that have a guaranteed repayment schedule. So what Nelson's trying to iterate there is that life insurance companies are conservative, and that's why we've been able to see a return for so many years. And then he goes on and talks about policy loans. He talks about when a policyholder requests a policy loan, the life insurance company has to actually get that money from somewhere. They are not creating it out of thin air. They are getting it from this pool of money that I just spoke about. Many people hear the word loan and immediately their brain goes into deep freeze. A loan equals something bad. It is a truism that you finance everything that you buy. You either borrow from some other source or you use your own money and give up the opportunity to earn interest. There are no exceptions. When your warehouse becomes your participating whole life insurance policy, your warehouse doesn't end when you do. Many of the places people store wealth become difficult to transfer. Bank accounts can get divided, investments can get divided, equipment eventually wears out or breaks down. Sometimes land might have to be refinanced, and that's where I talked about like refinancing being reset at every generation. Something might have to be sold, which doesn't leave a warm, fuzzy feeling for the people who are selling it. But a participating whole life policy works different. During your lifetime, it grows. The cash value inside it grows. When you pass away, it creates an immediate tax-free death benefit for your beneficiaries. And that's what changes the conversation. Instead of asking, how are the kids going to borrow enough money, or what are the terms going to have to be? How much are they going to have to pay every year? The question becomes, how can this capital help us keep the farm together? What can it do for this next generation and the betterment of our operation? Because a lot of times we know that farms and ranches, we can be asset rich and cash poor sometimes. And so whenever we are able to receive that death benefit, liquidity suddenly becomes the issue because there might be taxes, debt, or there might be operating expenses that need to be filled. Maybe we need to pay out that off the farm kid. Estate cost can be there. And so without liquidity, families often have to sell assets or get a bank loan. But liquidity, when we have liquidity in the form of a death benefit, it does create options for us. And so we are all about breaking the cycle. Every generation, all too often, walks into the bank and it starts over. And I've said this before, how many times are we going to pay the bank for the same piece of land? So just imagine if that cycle could be reset and something different could happen. If one generation that intentionally builds the warehouse throughout their lifetime provides access to capital when we're alive, but also when we're gone. That's powerful. Instead of inheriting another loan, the next generation inherits opportunity instead. So instead of them walking uphill both ways to school in the snow, 40 below, they're going to have a little bit better trip to school than we did. And then wealth isn't just what you leave, guys. Most people think inheritance means land, machinery, cattle, this big ranch. And while that's all wonderful, having a death benefit, creating that liquidity, operating on your own money, your own accessible pool of funds, your cash value, it gives us options to keep that farm together, buy out siblings fairly, maybe not equally, but fairly, avoid conflict during this time. It allows for easier grieving because there's less stress. It allows for relief in a time where often it is like so heavy with grief that this allows less stress. It might allow expansion, and it might allow us that time to grieve. Maybe we do need time to grieve. So one of the biggest mindset shifts that Nelson teaches is most financial advice begins with the question, where do I invest? But infinite banking begins with, where should I warehouse my wealth before I decide where to invest? And that goes back to interrupting the flow of money instead of working, earning income, putting it into the bank, paying the bills, whatever it has may be. Let's add one more step and let's interrupt that flow and let's get our money working for us forever before we use it for operating expenses or paying our bills or whatever it might be. So you haven't just found a place to store money when you stumbled upon the infinite banking concept. You have found a place to build a financial foundation, a place to store your wealth, a place to create that generational wealth. I have one more thing I want to read in Warehouse for Wealth, but one of the greatest tragedies in agriculture is that families spend generations building incredible wealth. You have land, you have cattle, the farmland, the equipment, but they build very little time creating liquidity. If someone passes away or when they pass away, the next generation often has to borrow money. And so what if there was another way? What if we viewed participating whole life insurance not simply as something you buy because you're going to die, but as a warehouse of wealth, a place that protects your capital, allows it to grow, provides access to it through your lifetime, and then creates a pool of tax-free death benefit that helps preserve everything you've spent your life building. Land creates wealth, liquidity preserves it. When those two work together, families aren't simply passing down a farm. They're passing down a financial system. And this goes into what Winnie and her daughter, Amagia, teach about generational implementation of the infinite banking concept and how it is our duty to teach our children about implementing the infinite banking concept and the importance of it, because when they receive that death benefit, we want them to know what to do with it and how to preserve it and impact generation after generation after generation. Amen. Hallelujah. That's what we're here for. So I know that you don't just build your grain bin because grain isn't valuable. We build it because it is valuable. We don't just babysit our heifers when they're calving because they're not valuable. We know that they are. So if your life's work has created wealth and you are proud of that, shouldn't you ask yourself the same question that Nelson asked? Where is the best place to warehouse my wealth? What if that warehouse didn't just protect your wealth while you were alive, but it also created liquidity that allowed your family to keep the farm or the ranch for generations and generations to come? I know that probably hits home to most every farmer or rancher. I know it does for me. And I didn't grow up on this land, but it still does for me. So the one last thing I wanted to share in Nelson's book is he talks about term life insurance and how during our lifetime, your need for financing the things of life is greater during your lifetime than your need for death benefit. This is not true with term life insurance because most policies never pay a death benefit because the insured only keeps the policy for a limited time frame. Therefore, the insurance company doesn't have to collect much premium in order to pay the death benefit for those who do happen to die during their limited time frame. So if I had been given the job on naming the product that the life insurance companies came up with, whole life insurance, I would have called it a personal warehouse wealth system with a death benefit as a bonus. That's a rather long name, so we would have to come up with an acronym of some kind, but it would have been far more accurate, as we wouldn't have all the confusion that exists today. So I am here to advocate for you to build your personal warehouse of wealth system with a death benefit as a bonus. And that is all I have for you today. So you know what to do. Head over to Apple, give us a 5-star review. We would love that. You can watch us on YouTube. You can hear us on Spotify, iHeartRadio, and Apple Podcasts. We would love your questions, comments, feedback. Send them to WeCare@rancherway.com. Grab your copy of Farming Without the Bank, Canadian edition, on rancherway.com. You're going to get the paperback and the audio version. Audio version is a game changer. Until next time, bye guys.
So glad you leaned in with us on the Win A podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.